nothing ventured, nothing gained. And that's where these 10x or 100x returns come from with Bitcoin, is because of the intense volatility. Yeah, it drops 50%, but it also goes up 10x.
Hey, talk to us about volatility. So somebody who's listening to this, they might say, okay, well, maybe I just buy some of this, but it's all over the place. I saw the price at 65, then it went to 30, then it went back to 65, and they're just kind of looking at it and saying, I just don't know that I could hold on to something that has that much volatility to it. So talk to us about what the volatility represents. How do you think of that as an investor, especially somebody who maybe is getting into it for the first time? Just walk us through some of those ideas.
Yeah, so volatility isn't necessarily a bad thing. I think that this word volatility has become this sort of like, ooh, evil word of like, oh man, volatility. It's volatile. That's scary. Well, you know what's volatile? Like Apple and Google, when they were first starting out, like there were some of the best performing equities in human history. And like, yeah, they're going to be volatile. They're not going to be super smooth. And when people think about volatility, I think volatility is both volatility works both ways. It's not just going down, it can also go up. And so I think volatility, when looked at from like a portfolio perspective, if you're someone who's really focused on volatility and you're really into like very like classic portfolio construction, you can think of Bitcoin as being value accretive to, in a modern portfolio theory mindset of adding Bitcoin to your portfolio increases its Sharpe ratio, which means your return per unit of risks. Bitcoin's return per unit of risk is a nice addition to your portfolio. So, I think that if you're in the more classic portfolio mindset, that's a great way to think about it. But also, like, nothing ventured, nothing gained. And that's where these 10x or 100x returns come from with Bitcoin, is because of the intense volatility. Yeah, it drops 50%, but it also goes up 10x. And so those who can hodl onto it, those hodlers are the only ones deserving of the value of Bitcoin, because they're the only ones who believed in it strong enough to weather those storms. The price swings up and down. But yeah, I mean, lots of stocks have been volatile. Like, again, in venture capital, the valuation of these startups fluctuate wildly. In Bitcoin in its earliest years, where it was more volatile, it's still quite volatile, but not as volatile as it used to be. And so, Bitcoin's not going to have these really, it's not going to have this smooth price appreciation, and you don't want it to either. Stable price and stable purchasing power actually signals manipulation. So, for example, with the US dollar, it has a very stable decay rate of about 2 to 5%, depending on inflation rate annually. And so it has that because the central, the US government and the central bank, the Fed, have absolute control over the money. And so if something has a stable purchasing power, it usually means that's heavily manipulated, versus something free floating like Bitcoin that is actually more stable longer term, because it has no centralized control mechanism, but the price discovery path is a little bit choppier as it makes its way to becoming gold 2.0 or the new world reserve currency.
All right. So we covered a bunch of FUD there. I want to talk to you just about more of the current events. So for people that are maybe listening to this, they're beginners. We're going to get into a little bit more of an advanced conversation, or something that for people that are into the community a little bit heavily. They're probably wanting to hear us talk about some of these other ideas. Let's talk a little bit about regulation. So in the coming 12 months, how do you kind of see Gary Gensler, people at the SEC, playing? What's their cards that they're going to play probably in the next? Bitcoin is a bubble, Dan. Bitcoin is a bubble. It's
the bubble that never pops.
It's tulips. I think that's the phrase I enjoy the most. It's tulips.
I think we still see that on Twitter. Do you still see those guys? They pop into the reply guys who talk about tulips, and I'm like, whoa.
I do.
What is this, 2013 all over again? I mean, that was a popular saying in 2013, like, oh, well, it's a bubble, because Bitcoin hadn't been around that long. So people didn't really know if it was going to come up again, right? It was sort of like we hypothesized it would, but to see that now is just so crazy. If you look at Bitcoin versus other popular bubbles, like the .com bubble and the tulip bubble, and was that like the Dutch East Indies bubble? I forget if it was Dutch East Indies or another big company. If you look at these very famous bubbles, Bitcoin's duration over its entire existence is far greater than most of these bubbles. So Bitcoin will have been the longest bubble ever in human history if it's truly a bubble. But also, it's kind of funny too, because people don't realize that like all money is subjective and it's a belief system. The only reason why the US dollar has any value is that we all believe it has value.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
And so that's a bubble. The bubble terminology is usually just used as a derogatory term. But when you turn that terminology and use it on normal assets like real estate, stocks, bonds, money, they find that they're like, no, those aren't bubbles. And I'm like, well, they're only worth something because someone else is willing to pay for it. If no one's willing to pay for it, then it goes to zero. That's sort of like their definition of a bubble. Like, oh, well, there's rapid price appreciation and there'll be a collapse and then all buyers will leave. And I'm like, okay, well, disagree. And Bitcoin's history has shown that there is a floor. There's a floor of hodlers who came in. A lot of them came in via speculation, and many of them stayed for sound money. And that's what provides the floor for Bitcoin, is because we're the ones who are willing to buy at the bottom. We keep it from going to zero because Bitcoin, as other money, it's a belief system, and we all believe in Bitcoin, and that's how Bitcoin has price stability. Is there are hodlers that eventually buy. So I think,
and that's provable, and I think that's what makes Bitcoin a little bit different. Is all the on-chain metrics, we can see the addresses of people that are long-term holders because their coins don't move once they go to their public address, and we can see these are the addresses that are accumulating in the dips. And so it's like all verifiable. You can see that these people are getting more entrenched into their ownership and their trust in the network. And good luck shaking them out of their coins as they're up 10,000% from when they first, created that public address.
Totally. Yeah. It's if Bitcoin was a bubble, then it would have gone to zero, and it hasn't done that. Now, yeah. People mistake Bitcoin's adoption curve, which are these rapid price appreciation moments with a corresponding bust, as bubbly activity. But how else was Bitcoin going to go from zero to a world reserve currency? It wasn't going to go in a linear fashion, a nice clean line upwards. Bitcoin acts like humans do. Bitcoin is part of humanity. We're raw emotional beings, and we FOMO in and we panic sell. That's where the term HODL really comes from. Is like this trader on the Bitcoin Talk forums realizing that he's feeling these raw emotions with the market, and what he should do is just hold on to his Bitcoin. And HODL is his misspelling of that because he's drunk when he's writing this. So I think that HODL philosophy is perfect for this. It's at Bitcoin, in terms of its price discovery of people realizing why Bitcoin's valuable, comes in ebbs and flows and in wild rushes, and it wasn't going to happen in this nice smooth fashion where Bitcoin goes up $100 a day for a year. It has fits and starts.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar, and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much, much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.